to the Sniper Entry series. In this video, I'm breaking down how I time my entries with a market maker strategy. I'll keep it very simple, first with a quick explanation, and then we'll jump straight into chart examples. All right, so I want to talk about the most important elements that make up the bigger picture. First one is the market maker structure, session timings, and the three-phase step, which is the accumulation, manipulation, and the true moves. So the market structure is basically your guide. This is what you need to be able to identify with clarity when you open up any chart. The moment it becomes a bit confusing, my advice to you is move on to the next chart or wait for a much clearer market structure and session timings, right? It is very important to know the right time that you are trading by understanding the accumulation, manipulation phase, and the expansion phase. So I will be breaking down all that, and we'll also be showing you guys my entry zones. All right, so when it comes to the market structure, this is one of the most simple concepts that many try to complicate, but in essence, the best trades are taken from very clear market structures. As you can see from this example right here, we've got a high, a low, a higher, higher low, higher, higher low. Identifying this shows us that we are in an up phase where we can identify consecutive higher highs and higher lows. We identify a change in market structure when a previous higher low is broken, which now becomes a lower low. From the lower low, we have a higher low, another higher lower low, and another higher low. This basically tells us that we are in a down phase. Right. So session timings, right? As you identify the market structure, it is very important to know the right session to trade a certain pair. An example can be GBP/JPY, that's the pound yen. The overlap of the Asian session and the London session is where we can most likely find a setup on the pair, as we know most stop hunts will happen during the London session. It is very important for one to look for opportunities at this time and ignore setups that happen during the Asian session. This does not mean setups don't happen during the Asian session, but selectivity is key. There are many fish in the sea, but well-timed catches are the ones that you will take home. All right, so we're going to talk about the three-step phase, right, which is our accumulation phase, the manipulation phase, and the true move phase. Right, so from the accumulation phase, we expect to see this during the Asian session. This is where the dealer accumulates orders. Right, this is during the Asian session. If you go in backtest, you will actually see that during the Asian session, not really much of movements happen, or rather that we don't really have much volume in the market around this session, right? And then we have the manipulation phase. This usually plays out during the London session. This is where panic and fast moves are seen to deceive traders about the direction whilst clearing the board by hitting the stops. Right, so remember, it's a game of manipulation, right? It's a game of where the money is, right? So that's where the market makers, that's what market makers are interested in doing, right? Taking your money, right? So after the manipulation phase, we have the true move, or some might call it the expansion phase, right? This is when the dealer sets the high of the day or the low of the day. This is where we would like to see a setup and ride the true trend. Right, this is after the accumulation and the manipulation phase has been set in. All right, so I've got an example on GBP USD of the three-step phase. So the yellow highlighted area here is our London session, and as you can see, I've annotated the move out of the box, as you can see. So at this point, looking at this chart, this was our Asian session high. At that time, high of the day. And as you can see, after the Asian session, around 8 a.m. my time, all right, we then had a move, a false move above the Asian session, right? As we can see, 1, 2, 3 pushes above the Asian session, right, giving us the high of the day. The dealer set the high of the day, and as you can see, we have the true move to the downside, right? We have the true move to the downside. Now, what will usually confuse a lot of people is, and we are talking of, breakout traders where, they would plot these areas here. And the moment they see a candle, right, close above this Asian session high, right, most of them would be going long, right, with their stops below. And as you can see, most of those traders get trapped right at the top and the dealer continues with his true move. Right, so we also have another example, which is a buy example of the 3-step phase. And as you can see from the Asian session, right, this being our Asian session low, we had the manipulation moves, right, as you can see in 3 swipes, 1, 2, 3, setting the low of the day and then giving us a true move. So these are the types of trades that we want to focus on, right? So that is one of the reasons why I say I'm not really a fan of trading the Asian session. But this does not mean we do not find setups around this time. We do. But, based on, my experience and me understanding the importance of being selective, I only focus for, trades after the manipulation in line with the market maker cycle. All right, so I'm gonna give you guys a chart, our chart quiz. What do you think will happen next? Do you think we're gonna go up? As you can see, what we have here, we've got the Asian session set. All right, Asian session set, that being the high, this being the low. Right, we have a stop hunt above the Asian range. Where you think this is gonna go? Right? Yes, you guessed that right. We went to the downside. Now, for some people, when they see this, especially for breakout traders or supporting resistant traders, there's a lot of reasons why you could think this will go long. I mean, for supporting resistant traders, they could plot this area, say support, resistance, and call this, the key level. As you can see, you've got support there. Even for some, SMC traders, they would probably look at this as an order block to go long. And this candle, this bullish candle might just validate that. This bullish candle might actually validate the supporting resistant traders thinking this will go long. As you can see, we also have a doji pin bar looking candle there. So most people went long with their stops below. And as you can see, the dealers went to the downside very aggressively, right? So it's very important to understand the 3-step phase. All right, guys. So basically, I'm going to be showing you a live trade example that I took on CADJPY, and we'll talk more about this after we go through that chart example, which I recorded of a live trade that I took on CADJPY. And if I play it, as you can see, it started off from the higher time frame, from the 4-hour, just, understanding what market structure we're looking at. And as you can see, we were moving away from an order block. We had a drop, base drop area, and price had now returned into that zone. So I was trading away from a peak and from a confirmed supply area. So as you can see, moving down to the H1 time frame, this is what we had. All right, we had a previous day where we can clearly see an information, a clear drop, right? 1 day of drop in the H1 time frame, and now I was looking for an entry on this day, and this is what I had. As you can see, a bit of manipulation that we could identify on this day. Moving down to the M30 time frame, this is what we could see. But I want to focus on the M15 time frame, right, to just explain what I've just shown you guys better. So this is what we have, as you can see, right? So we had previous day a clean move, right, giving us a drop, closing the day. And as you can see from this area right here, from the Asian session, right, beginning of London, we had a move to the upside. This move to the upside went and tapped the 200 EMA, right? Also at the same time breaking the Asian session high or the high of the day, which was set at that time. So as you can see, a lot of, retail traders got trapped at this point. As you can see, they also went and grabbed orders on the bottom side and grabbed orders on the top side. As you can see, we had basically relatively equal highs at this area, which was then taken out by this move, right? And as you can see, my entry was right there, right? We had a drop, and by the pullback, that is when I entered the market, right? So that's another example of CADJPY explaining and breaking down what I've just shown you guys about the 3-phase setup, and also the importance of understanding your market structure. So as you can see, we had a peak formation, and we also identified a 50 EMA and 200 EMA. The 50 is the blue one and the 200 is the white one. When those two cross over, we expect to see a move back to the 200 EMA the next day, next week, next month. It depends on whatever time frame you're looking at. So that's another trade that we took on CADJPY. We also sent a free signal in our Telegram channel, which I'm going to be breaking down for you. I hope you guys made money for that if you are part of our Telegram channel. If you are not, do find the link in the description below and become part of the MMK trading community. This is the free signal which I sent in our free Telegram channel, which you can join through the link in the description below. This was a trade on CADJPY, and as you can see, I had my stop, right? Very simple. We were trading away from a peak formation, right? We had a 13 EMA, 1350 crossover down here, and we also had the 5200 crossover. And my entry was right here. As you can see, we had a tap at that level, a W formation set. My stop loss just being a few pips below the low of the day, and my targets were up here, right, at 107.537. And as you can see, take profit was hit on CADJPY. This was an intraday trade. I wasn't looking to swing this specific trade here. As you can see, take profit was hit, and I did leave a run, which was later taken up. So that was a very good trade. So I'm going to be explaining the reasoning behind that. Very simple, right? In the M15 time frame, we had a clear W formation, right, a move up, right, and then on this day, this is when I identified this move, right? First leg on the 200 EMA, second leg, and that is where I wanted to enter my trade. And we took this trade. Take profit was hit with like 56 pips, right? Remember what I always say, 50 pips a day is enough. So it's not about executing a 1,000 trades a day to be successful, right? It's about being very selective, right? Being very selective. It's like having a gun, right? And you only have 5 bullets. You're not going to waste, those bullets. You're going to make sure that, your shots are on target. All right, guys, hope you learned something from this video. Don't forget to hit that subscribe button if you are new here. Also, check out our free Telegram channel for free signals, free setups, and live trading sessions 2 times every week.